Imagine a system where wars are not just fought on battlefields, but also on balance sheets. Every major conflict in the past century, from World War I to the Iraq War, has been a source of enormous profit for Wall Street. Banks, investment firms, and elite financiers have repeatedly positioned themselves to benefit from military conflicts, often long before the first shots are fired. While ordinary citizens bear the human and economic cost, these institutions capture billions through loans, arms production, and post-war reconstruction. The mechanisms are subtle, systemic, and astonishingly effective. During World War I, major American banks, including J.P. Morgan and Company, financed Allied powers with enormous loans. The U.S. government initially maintained neutrality, but Wall Street profited immensely by providing credit to nations at war, collecting interest, and controlling the flow of capital. By the end of the conflict, these banks had secured both financial dominance and influence over international economic structures. They were able to dictate which countries had access to liquidity, shaping the global post-war recovery in ways that favored American financial interests. World War II saw a similar pattern, magnified on a global scale. Financial institutions facilitated lending, war bonds, and industrial financing, ensuring that both the U.S. government and its allies could sustain prolonged military campaigns. Investment banks and financial elites held stakes in industries producing arms, vehicles, and technology, effectively turning military needs into profit centers. The mergers of industrial production and financial oversight created a system where war expenditure directly translated into revenue for a select group of financiers and corporate shareholders. Beyond direct investment, Wall Street has profited from the restructuring of post-war economies. Reconstruction efforts, loans to devastated nations, and the creation of international financial institutions such as the IMF and World Bank often benefited American financial institutions and investors. Policies and agreements were structured to favor creditors, ensuring repayment with interest and access to strategic resources. This created a cycle in which wars produced not only immediate profit, but also long-term financial leverage over both allies and former adversaries. In more recent conflicts, the pattern continues. Defense contractors, often publicly traded and closely linked to financial institutions, profit from military spending, arms sales, and technology contracts. Hedge funds and investment banks may also position themselves to benefit from currency fluctuations, commodity price spikes, and market volatility associated with war. Ordinary taxpayers fund the operations, while financial elites capture the upside, often shielded from public scrutiny or political consequence. The structure is complex, but the principle is simple. Conflict generates wealth for those positioned to finance, supply, and invest in it. In the modern era, the mechanisms of war profiteering have evolved but remain fundamentally the same. Defense contractors with strong ties to Wall Street continue to secure massive government contracts, supplying advanced weapons systems, cybersecurity technology, and military infrastructure. Investment banks and hedge funds often have stakes in these companies, meaning that any increase in military spending directly benefits their portfolios. Beyond direct profits, speculation on commodities such as oil, metals, and currencies further amplifies gains during times of conflict. Wars, therefore, are not only battles on the ground, but also carefully structured financial opportunities for those positioned to exploit them. Political connections amplify these profits. Campaign contributions, lobbying, and strategic alliances ensure that government policy aligns with the interests of financiers and contractors. Decisions about military engagement, foreign aid, and defense budgets are often influenced by these networks, ensuring that both wars and their financing serve the financial elite. The intertwining of politics and finance creates a system in which public spending is funneled into private gain and accountability is limited. Ordinary citizens bear the human, economic, and social cost, while a few reap extraordinary rewards. Post-conflict reconstruction and economic intervention present another layer of profit. Countries devastated by war often require loans, infrastructure investment, and technical assistance, areas dominated by institutions linked to Wall Street. These financial packages come with interest obligations, service contracts, and investment opportunities that generate revenue for American financial entities. Historical examples from Germany and Japan after World War II to Iraq and Afghanistan in recent decades show a recurring pattern. Capital flows outward from the public through government mechanisms and into the hands of well-connected financiers and corporations. Financial instruments themselves are designed to capitalize on instability. Derivatives, bonds, and speculative positions allow investment firms to profit from market volatility triggered by conflict. War creates uncertainty, and uncertainty drives markets, benefiting those with the resources, information, and connections to hedge, speculate, and extract profit. Meanwhile, the majority of the population experiences the opposite effect: higher taxes, inflation, and economic disruption. The system is cyclical, highly profitable for insiders, and largely invisible to the general public. Ultimately, Wall Street's involvement in war is not incidental. It is systemic and strategic. From loans and investments to industrial production and post-war reconstruction, the financial elite have developed a model that turns global conflicts into predictable wealth-generating opportunities. Ordinary citizens finance these wars through taxes, debt, and economic risk, often without understanding the scale or mechanisms of profit extraction. The historical pattern is unmistakable. Every major conflict has enriched those who control capital, while those on the front lines and at home bear the cost. Understanding this dynamic is essential to recognizing how modern finance and warfare intersect, revealing a hidden layer of influence and wealth that has persisted for over a century.